We discussed how to treat the debts. We discussed the recipients of Zakah. And we discussed some important rulings. Okay. And we discussed payment of Zakah, and we discussed zakatable assets, and we discussed amount of Zakah, and Zakah on gold and silver, and Zakah on cash. We discussed. Today our topic is Zakah on trading assets. The third category, Zakah on trading assets. Zakah is payable on trading stock if their market value is equal to or more than the value of nisab. Trading assets are those which are purchased with the intention of resale or capital gain. Consequently, goods that have been purchased for personal use and not for the purpose of trade are not subject to Zakah, irrespective of their value. Similarly, goods other than gold and silver, originally bought for personal use, are not subject to Zakah if the purchaser subsequently intends to sell them for trade and had not intended it at the time of purchase. Once sold, however, their sale price would be subject to Zakah. Likewise, a person may purchase goods for personal use with the intention that if he is able to obtain a profit thereon, he would sell the goods, in which event no Zakah is payable on such goods. On the other hand, if an asset is not purchased and is owned by some other means, for example, inheritance or gift, then the asset will not become the subject matter of Zakah. In short, trading assets are those that are purchased and purchased with the intention of sale. If any of these two conditions is missing, the asset will not be treated as a trading one and thus will not be subjected to Zakah. Following are some situations relating to Zakah on trading assets. Nisab of trading asset is same as that of cash. If the value of the assets reaches the value of 87.48 grams of gold or 612.36 grams of silver, then Zakah is obligatory after the completion of year. If a person has a house that is leased, the value of the house will not be subject matter of Zakah, as leasing a property does not render it a trading asset. However, the rentals received will be the subject matter of Zakah. Since the machines in the industries are not trading assets, therefore no Zakah is obligatory on them. However, if they are purchased with the intention of resale, then Zakah will be obligatory. The products manufactured in an industry as well as the raw material are subject matter of Zakah. If a person has some trading assets that do not reach nisab, then if he has some other zakatable assets such as gold, silver, and cash, and the combined value of all zakatable assets reaches the value of 612.36 grams of silver, then Zakah is obligatory. It is permissible for the Zakah payer to estimate a bulk price of the trading assets, for example, the market value of the stock in trade, if sold in bulk at the end of the Zakah year, for the purposes of calculating Zakah. Zakah on shares. If shares are purchased with the express intention for resale or capital gain, then the entire value of the shares is subject to Zakah. If, however, the shares are purchased with a view to holding them as an investment and receiving the dividend income, then the following must be borne in mind. Ownership of a company's share Ownership of a company's shares confers undivided ownership in the underlying assets of the company. The holder is a proportionate owner of the business. All business assets can be classified into two types. For the purpose of Zakah, fixed assets like machinery, building, furniture, current assets like cash, stock, and trade receivables. Fixed assets are exempt from Zakah, whereas current assets are subject to it. The owner of the shares can deduct from the zakatable value a proportion equivalent to that of the liabilities and the fixed assets of the company. In other words, it is permissible for the owner of the share in this case that he does not take into account the liabilities and non-zakatable assets such as plant and machinery. The way to ascertain the proportion of zakatable assets to non-zakatable assets of a company is to consult the balance sheet and profit and loss account. These documents are available as part of the company's annual report. Zakah payable formula. Zakah payable is equal to total assets as given in the balance sheet minus fixed assets minus total liabilities. So you will get net current assets divided by total number of shares outstanding. So you will get the asset of value per share multiplied by 2.5%. TA minus FA minus liability divided by SO multiplied by 2.5 over 100. So you will get per share zakah per share. The above mentioned detail is for the one who has the ability and resources to ascertain the exact amount of zakatable assets represented by the shares. However, if the calculation gets complicated for somebody, then he should consider the entire value of the shares as his zakatable asset and thus pay zakah for it. Financial investments continue. So this portion of presentation is taken from NCB Capital. This portion is taken from the guide of NCB Capital. Okay. NCB Capital. Zakah is due on the balance of the investment account, principal plus profit. The rate of zakah is 2.5% if calculated on the basis of a lunar year and 2.577% for a solar Gregorian year. If the balance includes interest, the zakah is due on the principal only. The interest is prohibited and should be donated to charities. So that was zakah on investment account. Now zakah of investment funds. Investment funds vary. Some of the important are as follow. Commodity and share murabaha fund. Commodity and share murabaha funds. Zakah is due on the balance principal plus profit of the murabaha based fund as if they were the assets for trade given they reach the threshold and complete the 1 year ownership cycle. The rate is 2.5% for lunar calendar. Ijara lease funds. No zakah is required on the assets of funds investing in leased property, equipment, and vehicles. Zakah is required on their return only after it reaches the minimum threshold and completes the 1 year ownership cycle. The rate is 2.5% in case of lunar calendar. Equity funds. Investment in equity funds can have different objectives. First, if the objective of both the investor and the fund is to keep the shares and benefits from their dividends, Zakah is due only on the dividends. Second, if the objective of both the investor and the fund is to trade in shares, buy and sell them, the investor shall pay Zakah on the shares and their dividends. Third, if the objective of the fund is to trade in the shares, buy and sell them, the investor in this case is considered a trader in shares and as such shall pay Zakah on the shares and their dividends. Fourth, if the objective of the fund is to keep the shares and benefit from their dividends, but the investor invests in the fund for the purpose of trading, the investor in this case is considered to be a trader in shares and as such shall pay Zakah on the market value of the shares and their dividends. Zakah of Sukuk. The Sukuk certificates represent undivided shares in the ownership of the underlying assets. All types of Sukuk are subject to Zakah as follows. Sukuk al-Ijara. The Zakah is not due on the principal value of the certificates. However, it is due on the rental proceeds at the rate of 2.5% for a lunar year. Once the rental proceeds reach the minimum threshold and complete the 1 year cycle in possession. Sukuk al-Musharaka. Zakah depends on the type of the underlying assets in the partnership-based sukuk. If the partnership is in traded assets, Zakah is due on the market value of the certificates as well as on the return on those certificates if reaches the threshold and complete 1 year ownership cycle. If the underlying assets are leased assets, Zakah is due only on the return of the certificates. The rate of Zakah is 2.5% of market value on the day of paying Zakah for lunar year. Number 3, Sukuk al-Mudaraba. Zakah is due on the market value and the return of the Sukuk al-Mudaraba. If the underlying assets are traded, bought and sold, and their market value plus return reach the threshold and complete 1 year. Complete 1 year ownership cycle. It is only due on the return amount if the underlying assets are leased and the return amount reaches the threshold and completes 1 year ownership cycle. Concession and rights based sukuk. If the sukuk certificates represent rights, they are considered as investment in the usufruct. The Zakah is due only on the annually distributed return of rights. The rate of Zakah is 2.5% for a lunar calendar year. Zakah of shares, bonds, and treasury bills. The rate of Zakah is 2.5% of the market value of the shares, bonds, and treasury bills for a lunar year. As follow. The management of the company shall pay Zakah exactly as the common person would if the shareholders have authorized them or if the article of association provided for such action. B. If a shareholder sold his shares during the year, he shall add their value to his other funds and shall pay the Zakah when the annual maturity comes. If the shares are acquired for the purpose of trade and benefiting from the price fluctuation and the company does not pay Zakah for those shares, they are treated as trade assets if its market value reaches the threshold and completes the 1-year ownership cycle. If the shareholder is holding the share for the purpose of only benefiting from its profit, the zakah is due only on the profit amount if reaches the threshold and complete the 1-year ownership cycle from the day it was possessed. Bonds and treasury bills paying interest are considered as debts with interest. Zakah is due on their principal amount. The interest is prohibited and shall be paid to charities. Okay, so the preceding part, financial investment assets, the explanation were taken from the booklet published by NCB Capital. So in summary, we can say for a common person, one who is not involved in livestock or agriculture, yani people who are living in cities, all that needs to be taken into account for zakah calculation is the following. The amount of cash owned, be it on person in the bank or loaned out. This can be money earned or income from additional house, properties, etc., as well as the value of any gold or silver jewelry owned, necklace, watches, etc., but not the gems or stones within them. And also, if one is involved in trade, then the value of one's stock, merchandise at that time constitutes one's accountable total. Debts owed to others should be calculated too and then deducted from the total zakatable assets. Intention. The intention to give zakah is a prerequisite for the discharge of the zakah obligation, as in the case of salah and sawm. In the absence of such intention, whether due to ignorance or forgetfulness, the zakah obligation is not discharged and the amount paid over to the recipient will deem to be nafal sadaqah. The requirement of an intention to fulfill zakah is necessary in order to distinguish payment of zakah from other forms of compulsory and voluntary payments to poor and needy persons. Following are some situations relating to the intentions of zakah. The zakah obligation is discharged if the intention is made at either of 2 points of time: at the time of giving zakah or at the time of separating and setting aside the zakah amount for distribution. In this case, the zakah would only be discharged if the physical transfer to the needy recipient is made. If a person gives an amount of money or property to a poor and needy person who does not own nisab and fails to make any intention at the time of such payment, but thereafter makes an intention of zakah, then if such property or money is still in the hands of the poor and needy person, the zakah obligation will be discharged. If the property or money is no more in the hands of the poor and needy person, the intention so made does not suffice and the zakah obligation is not discharged. If the zakah payer or owner pays the zakah amount to an agent for distribution to the recipients entitled and makes the intention at the time of such payment to the agent, then the zakah obligation will be discharged if the agent gives zakah to the poor without any intention on his part. This is because the intention of only the zakah payer and not that of his agent is relevant for purpose of payment of zakah. A person pays the zakah of another from the latter's property and without his permission, and thereafter such owner sanctions the payment. In such a case, if the amount paid is still in the hands of the needy recipient, the zakah obligation is discharged. If not, the zakah obligation will not be fulfilled and the payment will be in lieu of nafal sadaqah. A person gives an agent an amount of money for distribution as voluntary charity, nafal sadaqah. Prior to payment thereof by the agent to a poor and a needy person, the owner makes an intention that the amount so given should represent zakah, in which event, if such amount is therefore given to the poor, then the zakah obligation would be discharged. Agent prior to payment thereof by the agent to a poor and needy person, fakir. The owner makes an intention that the amount so given should represent zakah, in which event if such amount is thereafter given to the poor, then the zakah obligation would be discharged. Principle of al-tamliq. Al-tamliq means transfer of ownership of zakah from the zakah payer to a poor and needy person. It is in the context of zakah subject to the following conditions. The transfer must be the zakah payer. The transferor must be the zakah payer or his agent. The transferee or recipient must be a natural person entitled to receive zakah in terms of the 8 categories of the recipients of zakah. The transfer of zakah must be unconditional. The transfer of zakah must not be a consideration for services rendered by the recipient. The transferee or recipient must acquire physical possession of zakah and thereby becomes the owner thereof. If these conditions are not met as for the instance where zakah is paid as salary or used for building a mosque, the zakah obligation is not discharged. There is consensus amongst all the 4 schools of thought that zakah cannot be used for public welfare projects. The position is summarized by Imam Abu Ubaid Qasim ibn Salam. Imam Abu Ubaid Qasim ibn Salam is as follows. In relation to paying the debts of a deceased person, or paying his burial expenses, or building a mosque, or digging a stream, similar public welfare schemes, Hazrat Sufyan Sori and all the ulama of Iraq and other ulama are unanimous on the point that these works cannot be undertaken with zakah money because they are not included in the 8 categories of recipients mentioned by the Quran. Charitable hospitals. If zakah is paid to a charitable hospital, certain arrangements must be followed, otherwise zakah will be void. Every zakah deserving patient should appoint the management of the hospital as his agent to receive zakah and spend it on procurement of the medication and paying cash against other expenses incurred against his treatment. This can be done through filling a form before the treatment of the patient. If a charitable hospital follows this arrangement, zakah can be given to it. Otherwise, in the case where no agency agreement is made, zakah will be void. Agency. One is not obliged to distribute the zakah by himself to the entitled recipients. He may validly appoint an agent, whether natural person or organization, to pay the zakah on his behalf. In appointing such an agent, the zakah payer must bear in mind that the zakah obligation is not discharged if the agent fails to distribute the zakah to the entitled recipients. At the same time, possession of the zakah amount by the agent will be deemed to be possessed by the principal zakah payer, as in the case of those organizations who are guilty of serious maladministration by collecting zakah and not distributing the same for a number of years without valid reason. It follows that the zakah payer must exercise utmost care in appointing an agent who must be both trustworthy and also conversant with the laws of zakah. The agent, unless instructed to the contrary, may validly give zakah to his wife and children if the latter do not own nisab. On the other hand, the agent himself cannot take zakah unless he has the express authority to do so. For example, he may take zakah if the zakah payer gives him a mandate in the following terms: pay zakah to whomsoever you wish. Provident fund. If the salary of the employee is deducted at source without giving this amount to the employee, zakah is not payable on the amount kept in the employee's provident fund until the employee receives the same. When an employee receives it on his retirement, the amount so received shall form part of his zakahable assets of that year only, and such part of it that is not spent before the valuation date shall be subject to zakah, and zakah will be payable on the aggregate balance of his assets, including the balance of the amount received from the fund on the valuation date. If, on the other hand, the employee first receives his amount and then with his own intention puts his money in the provident fund, then this money will become the subject matter of zakah, and zakah will be obligatory for all the years in which the money is kept in the fund. In other words, the amount received from the provident fund must be held for 1 year before zakah is payable thereon. If the recipient has existing zakahable assets equal to nisab, then the amount received from the provident fund will be added thereon, and the whole amount or the balance remaining in case of expenditure will be subject to zakah of the next valuation date. For example, the zakah payer's valuation date is first day of Ramadan each year, and he receives the lump sum from the provident fund 2 months before that date. The lump sum will be added to his existing nisab, and he will pay zakat thereon on his valuation date next, namely first day of Ramadan. Example: a person X is a manufacturer of clothing. He has the following assets and liabilities at the end of the zakah year: house, 2 million, furniture and household effects, 25,000, motor vehicle 600, gold 100, diamonds 50, cash 1.5 million, stock in trade 1 million, machinery 500,000, receivable from others 800,000, vacant land 800,000, liabilities, bank overdraft 50,000, trade creditors 500,000, loan 700,000. So total liability 1,250,000. We need to calculate zakah of this person. Assets subject to zakah: gold, cash, stock and trade. That's it. Look back. You have so many assets. You have house, you have furniture, you have motor vehicle, you have diamonds, you have machinery, you have receivables, you have vacant lands. We included only 3 assets for the purpose of zakah: gold, cash, and stock in trade. So total is 2.6 million less liabilities. Liabilities are 1,250,000. So balance is 1,350,000. Take the 2.5% of 1,350,000. That is 33,750. Hence, X is obliged to pay 33,750 as zakah. House, furniture and fitting and motor vehicle are not subject to zakah unless they are purchased for trade. Gold is subject to zakah whether for personal use or otherwise. Diamonds, precious stones and metals are not subject to zakah unless acquired for trading purposes. The same applies to all metals other than gold and silver. Cash and stock and trades are subject to zakah by consensus of jurists because they are assets capable of growth through commerce and economic activity. Machinery is a means of production which depreciates in value over time and is not an asset capable of growth. Hence, they are not subject to zakah. Account receivable from others are subject to zakah, but the obligation to pay zakah thereon only arises upon receiving of the debts in question, in which event the zakah of preceding years must also be paid on such debts. Zakah is not obligatory on land unless acquired for trade, even if they are purchased for rent. Zakah is not obligatory. The debts must be deducted because the assets of the debtors are correspondingly exposed to the claims of creditors according to Hanafi law. However, if the mortgage bond or bank overdraft or other long-term liability is of such a large amount so as to nullify the zakah liability, then such debts must not be taken into account according to Shafi law. So that's it. Your questions are more than welcome.